Welcome back to the Eugene Exchange podcast. The market is open. We have a great show for you tonight, or this afternoon, or this morning, wherever you happen to be in this massive world we live in. 3 items on today's podcast agenda. First, we have a news story out of China, which you've seen from the title and thumbnail of this video that will shock you, and I have some geopolitical commentary on these events. Secondly, I just finished an interview with an acquaintance of mine, Helborne Finance. We talked about all things commodities, passive income, financial retirement, and even dive down into niche topics like dropping out of college and the college experience. It really was quite the discussion. I enjoyed talking with him because I realized, especially over my conversations with him, he and others like him are the archetypal person I'm trying to appeal to with this channel. Usually Zoomers, people who like to save, people who are interested on becoming financially independent or even retiring early, and people who have a passion for investments and gathering resources and setting up their lives that way. So it really was an excellent discussion. I appreciate him coming on the podcast. Then after that, we'll wrap up today's show with a small but still meaningful Martin Minute. First story I want to draw people's attention to is not an investing story, but is important nevertheless, because I can tell you my best investment plays actually have come from news that have nothing to do with investing. So again, I like to tout this, but it is a recent success of mine. Back in January, February, and March, I think I read the world and geopolitical situation on the coronavirus very well. And I was in Discord servers warning people and arguing about it, that it was going to be a big thing. Very few people listened. Most people pushed back against me, but I structured my investments accordingly. The specifics of how I reacted with my investments to the coronavirus meltdown in March and what I did to both protect my assets and grow them are available in a detailed write-up on the Telegram journal linked in the description. In there too, I think what's most important is I go over my mistakes and what I would do next time if I know in advance that there's going to be an economic meltdown like I did with the coronavirus in January and February. Anyway, leading on to the story we're going to talk about today, we have a headline from BBC News. China becomes the second nation to plant a flag on the moon. I've spent a long time looking at the photo provided in this article that was taken by the Chinese Space Agency. And I showed it to a few of my friends, and almost universally the remark was that the photo looked fake, which is interesting, obviously. So many people even believe the US moon landings were fake as well. And it's interesting when you see such a historically significant photo and such a geopolitically significant photo. The gut reaction of a lot of people when they don't want to accept it is that it's fake. I'll read from the article now. China has planted its flag on the moon more than 50 years after the US first planted the stars and stripes there. The pictures from China's National Space Administration show the 5-starred red flag holding still on the windless lunar surface. They were taken by a camera on the Shenzhou 5 space probe before it left the moon with rock samples on Thursday. 2 previous Chinese lunar missions had flags on the craft's coating, so neither could be affixed to the moon. So this is just nitpicking, and semantically, this is the first Chinese planted, the first nation other than the United States to plant a flag on the moon's surface. Following up, this is the important paragraph. The U.S. planted the first flag on the moon during the manned Apollo 11 mission in 1969. 5 further U.S. flags were planted on the lunar surface during subsequent missions up until 1972. So what the article is saying is that, yes, in fact, the United States was the first to plant flags on the moon, but the detail that the listeners should take close attention to is that the last time the United States did something obviously astronomically significant, which is planting a flag on the moon, was in 1972. Now here we are at the final days and weeks of 2020. China now has accomplished the same feat. So you can see a massive change just in the span of 50 years, and by no means do I let this drive all of my investment decisions. I believe as of this moment, I don't own any Chinese companies, but you can take a look at the trajectory of how different countries have both responded to the coronavirus pandemic and also how they've been dealing with technological advancement, and asking yourself frankly, do you see the United States doing something significant as planting a flag on the moon? The last time was 1972. This is why I talk about ex-United States investing, both on previous podcasts and on the Telegram journal. Too many people, in my view, are tunnel visioned on the S&P 500 ETF. The United States S&P 500 is significant, but it is not the world. And you can see other countries, not just China, plenty of other countries as well, are responding better to technological change, and more specifically the coronavirus pandemic, and the trajectory they're on is more inspiring, frankly, than what's going on in the United States. Now, specifically, there are ETFs, for example, VXUS, the Vanguard ETF, ex-United States, where you can take advantage of non-United States investing, but I think it would be more prudent to be more focused when you're trying to invest in companies and industries outside the United States. And also later, my talk with Helborne Finance, we go over some of these specifics and how you can invest outside the United States. The fact that he revealed a very significant and shocking fact to me that he doesn't own any United States companies. It was incredible. Anyway, the point of this article is that you need to be paying attention to broad geopolitical news so you can see the macro currents of what's going on in the world. So when you see a story, China becomes the second nation to plant a flag on the moon, there's no stock ticker for you to buy, nor can you draw a conclusion of any stock ticker you should be buying. But you need to constantly have a feel, what's the momentum? What's the trajectory? Where are things going? And this is a crucial story. This is far more important than any Tesla press release or political tweet. This is what you need to be paying attention to. I've had the most success in investing running how I consume my news on the internet like I'm an intelligence analyst. And what intelligence analysts do is they just monitor every single source of information available, and their brain acts like a correlational database. They act like a computer. That over time, they get a feel for what sources are reliable, which sources are coming from which perspectives, and what sources have what biases. And eventually, when you're monitoring everything, you get a feel of not only what is going on, but also what everyone is thinking from every single possible perspective and angle. Because obviously, everybody segregates themselves into thought camps and thought groups. You need to be monitoring all sides, even if you don't have a personal affinity for that. Which is why I watch normie investing videos as much as I can. I need to understand. I need to get into their mindset. That wraps up the first story of today's podcast. Next up, without further ado, we have the much coveted Eugene Exchange interview with Helborne Finance. Please enjoy. Hello, everyone. This is Eugene Chargren here. I'm here today with Helborne Finance. And what made me want to reach out to this person? He runs a blog primarily on commodity investing, but what impressed me the most about him was, number one, when I learned how young he was, and then also number two, how at such a young age he gravitated to relatively hard to understand commodities like copper and uranium and approached it from a data-driven and analytic perspective. Most people, when they start investing, they are almost immediately, in my experience, attracted to hype stocks and other very flashy, catchy things. Bitcoin, for example. Very rarely have I seen someone be so, again, data-driven and analytical about investing at such a young age. I definitely was eager to know more, and we were first introduced to each other through a investing Discord server. And what definitely impressed me the most about was his attention to detail on data. So one time on Twitter, I noticed you posted a graphic on, I think it was copper deposits discovered by year. Is that right? Starting in the early 1900s. And you could see
that's
a
right.
retweet. And you could see the number just precipitously dropping over the years. And in fact, the last time there was even a remotely sizable amount of copper discoveries was in the early 1900s. So it stunned me to know that it had been so long since that happened. And I know obviously copper is important, that people even steal the wires out of houses nowadays. But the point of this discussion is not so much commodities. If you want to definitely, in my opinion, a mature, almost seasoned beyond his years look on that sort of information, I encourage you to go to his website, which he'll plug here later. But actually today we're talking about starting off in investing, being younger, but also looking forward to the future and interest in a passive income lifestyle and learning how to retire early on investments. And that's something that I've definitely moved down further on my investing journey. And Helborne that I'm talking with here is just beginning on that same thing. So we're happy to have you on the show.
Well, thank you for that introduction. That's pretty kind.
How would you introduce yourself?
I appreciate it. A lot less generously than that, I'd say. But as you were saying earlier, you're the biggest critic of yourself at times.
Yeah,
for sure.
So I get the impression that you are a Generation Z Zoomer. If you could validate that prediction and also tell me what you think about the Generation Z Zoomer investing mentality and how you line up in that matchup. If you could let me know about that, that would be interesting.
So yeah, I'm 20 years old. I'm a junior in college right now.
Junior, okay.
And yeah, so a lot of the people around me, there's actually more people investing around my age than I would have expected. I actually know a couple of people that are interested in public markets.
Interesting. Yeah, when I was in university, I could count the people who cared about that stuff on one hand. I remember back in university, this was probably a very brainless moment of mine. I was up tracking the Bitcoin markets at 2 a.m. And I stepped out of my room. We were in a shared college rented apartment. And my roommate, who was half asleep, he woke up and said, "Oh, what are you doing?" And I said, "Oh, the Bitcoin, it just went up 15%. He's like, I don't care. And he went to sleep. So definitely I'm noticing a change between the millennial generation and the Zoomer generation in interest in investing. So the people who were interested in investing when I went to university were either people who were dedicated to studying finance, which that's a given, and then people who maybe were interested in memes. So I know one person, they only cared about Dogecoin. And the two other people, they were only into OTC scam stocks. What are the Gen Zs interested in investing these days?
Yeah, so generally I'd say it's actually pretty interesting because there's a growing portion of people that are becoming aware of the macroeconomic problems that are going on with huge stimulus and just printing trillions of dollars. Jerome Powell, thank you. So I actually have a friend that's all in on Bitcoin. He's not going to college right now, and he's
those two might be related.
He's poured a lot of money into Bitcoin.
I'd love to talk to him. Oh, jeez.
Yeah. I can see why the predictions to 100,000 or 200,000 could be accurate, but it could take a long time before we see that point. But generally, definitely more people are excited. There's always the Tesla mentality, and most of the people that are investing at a young age are following the crowd. They're definitely not interested in commodities, I'd say that.
Yeah, you do. You tend to notice that, don't you, with your mutuals on Twitter? That's part of why I wanted to talk to you. You're not the stereotype for someone who would be into commodities or even this kind of investing. Why do you gravitate towards that and being data-driven, analytic, versus you could go all in on hype Tesla and make 50% in a week? Why aren't you doing that?
There's a chart I posted on Twitter.
What was that?
Maybe a week ago. It's a comparison of commodities versus the S&P 500 in a ratio. And commodities are basically at one of the most undervalued points they've ever been. And I really gravitated towards that. It was really interesting how I found out about it in the first place. I was just randomly looking for stocks to buy. This was a couple of years ago when I first started investing. And I was just randomly thinking about nuclear bombs for whatever reason. I was thinking about Call of Duty video games or something like that. Yeah. And I was just curious. I'm like, I just started looking at investing. Are there uranium stocks? Do people actually mine uranium? Is that a thing? So I started searching. I found a place called Cambridge House, which has a bunch of presentations on YouTube, and there's one by Mike Alkin, and I just stemmed off from there. And now I'm all in on commodities. It's been quite the journey over the past
so it sounds like what you're saying
2 years
is that you were searching, and I guess you happened to come into contact with different information, right? So I'd imagine the Zoomer who looks up something investing these days runs into a video about like Tesla or what do they invest in, these, like anything electric car. That's my experience. So maybe it was
Nikola, these things.
Guys, you can tell I don't invest in this stuff. It shows, doesn't it? So I feel like part of this too is that your introduction to investing actually is no different than someone would have done in the early 2000s or the 90s, the mid 90s. A simple search and you come into, and I will say commodities can be a popular area of investing. I can definitely tell just from your Twitter activity that there's traffic in there. But
but there's a small community there on Twitter.
Okay.
But it's building.
Yeah. So I'm very curious why you would come into contact versus I think if you Google investing these days, you run into a video with a high contrast thumbnail talking about Robinhood and I guess Tesla and dividend stocks. So I wonder what was the difference there. So if you could actually, I'd like to know how exactly you got started in investing and then how it began day one.
Day one, I was It's a decently funny story, but also pretty awkward. I was actually at the university that I go to. I was at their orientation where they pass out all these flyers and trying to tell you about internships, etc. And this guy came up to me and was giving me the typical spiel for whatever they're mentioning. And he was, at the end of his sentence, he said, public and private markets. And that really, I didn't think anything of it at the time. And I didn't even know what he was talking about. So I was just staring at him in a really awkward conversation.
What was the full sentence? What did he say about public and private markets?
He was basically just saying the company he works for offers consulting in both public and private markets, something along those lines.
Okay, well, so what that means is that they do consulting for anybody, any customer they can get. That's what.
Oh yeah, I know. At the time, I had no idea.
Yeah, that's like saying I walk on ground and pavement. Yeah, I really get around, don't I? Yeah, but continue with the story, please.
Oh yeah, they offer it for everybody. A couple months later, I'm sitting in my dorm. You always have those moments where you're reflecting on awkward conversations you have. So I just started looking up different things over time. What are public markets? What are private markets? Oh, what are stocks? Eventually, I get to the point to where I open up a Robinhood account, which is always...
okay, actually, I was about to praise you. I guess that was the first...
Yeah.
It is interesting, though, just to interject here really quickly. You're approaching it from understanding the basic terms and fundamentals. So I notice you're talking about, again, researching terminology, how it's structured. I'd imagine that's not how the average person gets into that. They're looking at the dollar signs. What's the hot stock, the hot momentum play right now? Or what's going to the moon?
Oh, yeah.
So that is answering a lot of my questions. And if there's more to the story, please continue.
Yeah, there's definitely a lot of people chasing, but there's not that much more to it. I realized on Robinhood about a year in that they only offered U.S. stocks and they didn't even let you buy over the counter. After that point, I switched over to Fidelity. Now I'm buying mostly international stocks, actually, which is quite different from the typical U.S. investor.
Well, then how much did you start with in investing?
I started with about $500. I was working over the summer and worked at a Home Depot grocery store.
I gotcha. So I guess those two kind of tie into each other. So you're a teenager at the time. You got $500 saved up from working over the summer. Why don't you go take a trip to the beach or buy a nice Moscato wine? Why invest?
Honestly, I don't necessarily know how to answer that. I just started learning about stocks. Maybe I played a game for a while when I was younger. It's called Off-World Trading Company.
I played that as well, yeah.
Oh, really?
Yeah, I have many hours in that.
Yeah. Supply and demand fundamentals, these types of things. I'd also learned about it in high school.
You gravitated to that game because that game is all about commodities. Interesting.
Yeah, it's all clicking.
I'm sure no one in the audience even knows Off-World Trading Company, but I'll explain it very briefly. So it's set in a future where I think Mars, Jupiter, and Europa are being mined and the resources are being exploited. And there's a dynamic economy based on supply and demand of these various resources. So I guess there's ice, water. What are the other ones? Do you remember silicon? Glass
there's
is one?
Food, electronics, et cetera, you know?
Yeah, I think even iron and I don't want to say cobalt. Anyway, so yeah, that's definitely an investing style game, but again, that still begs the question. You have $500 and that's significant for someone at a younger age. There are so many different ways than going on the internet and buying strings of 4 letters. If you think about it like just from a very out of context perspective, investing is a weird thing to do with your money. Looking up 4 capital letters and spending what is equivalent to an entire summer's worth of labor. I'd imagine working Home Depot, maybe that's not the worst job, but you'd rather be playing Off-World Trading Company if I had to guess. So why do it?
I think from a pretty young age, I'd always been a saver. And I think maybe this could have been a contributing factor, but I learned about inflation in a high school economics class. And that was definitely not my main thought process at the time, but maybe subconsciously that had some effect on me. Who knows? But I can't necessarily say to what originally brought me to it. But once I started researching, I was hooked. And
I guess it is interesting. Yeah. Some people are driven to saving, but especially the older generation, I've noticed. But if they're not financially educated, what that usually amounts to is money sitting at best in a savings account or sometimes in a checking account. So they'll pile up the money but not actively invest it whatsoever. I mean, it's interesting that you say that you're naturally drawn to saving. So yeah, maybe all this just boils down to your natural disposition. It's funny you say that because once upon a time I had a video on this channel. I took it down as private, but it was titled "Why I Have Hundreds of Thousands of Dollars in Stocks But Don't Even Own a Car." And what that video was about was exactly what you were saying. I was going through my investing life from day one to the present, and I do feel naturally drawn to saving. So it's very interesting you would say that, and at the same time too, playing the same games. That's really incredible. Then I have to ask too, what are you studying in university?
I'm actually not studying finance. I'm actually studying data analytics, which is a STEM major.
Okay, and that explains why. And by the way, to the viewer, this is the first time we're properly meeting. And in the introduction, I said I was very stricken by how truly data-driven and analytic his blog is, and then surprise, the cart follows the horse. That's interesting. So then, the real question is, if you're a data and analytics-driven guy, you have to know the stats on university in 2020. Why attend? Why not just drop out? I have a friend who runs a blog dedicated to convincing people to dropping out of university. So I'm wondering what's the cost-benefit there for you?
I agree. In most cases, it probably is beneficial. I'm very lucky to have a family that is not requiring me to take out loans. They'd saved ever since I was born. They'd been saving $400 every month. So I was very lucky in that respect. So it's not costing me for loans, but also I'm picking a major that will actually have some utility, even if I don't necessarily make it in entrepreneurship or something along those lines. Like, I'm learning coding in these classes. I'm learning Python, SQL, things that could both be used in the job market and in entrepreneurship and in building websites or services or whatever will provide value. But
so
there's,
it seems valuable, and because you're studying STEM, I think the cost-benefit equation still lines up with you're studying STEM. If you're studying most of anything else, my thinking more aligns with my friends thinking that college isn't worth it. In your case, I think you can justify continuing. But for me, and this will actually dovetail very nicely into our discussion about retirement early, passive income, financial freedom, you can see the relationship, though, between dropping out of university and the idea of the financial freedom, passive income lifestyle. Because it's like going off the reservation and taking the non-ordained path.
Yeah, the idea of going to college is so proliferated. There's so many jobs out there that plumbers, electricians, these types of people, they're not getting very much praise when there should be a lot more people going into those fields than some of the majors over at colleges right now.
Well, similar to commodities, I'd imagine, for example, trades like you say, like plumbing, they're undervalued, if we're going to use that term. And at some point, the market will adjust for that.
Yeah, I would agree. Especially at some point, this debt crisis might implode on itself, or who knows what can happen geopolitically. Keep
in mind that people have been saying the dollar is going to collapse and there's going to be a currency, whatever, for decades and decades. I've been saying it. Peter Schiff, for example, I'm sure you're familiar with him, since the 90s.
Yeah. Definitely not in my plans to rely on debt crisis imploding. Definitely not in the cards for me.
My opinion, just looking at it from a historical geopolitical perspective, is that financial crisis is not what's going to lead whatever happens. I don't think we're going to just wake up one day and have a dollar collapse. Like I said, people have been saying the sky is falling on that for decades and decades. And if you were betting on that, it has not come to pass for you.
Yeah, and the reason why I own commodities is definitely not because of debt or even relying on inflation, even though, it seems like inflation might at some point come back, but who knows on that one.
Yeah, no, it's a good trade-off where if you're still making money in commodities like their growth stocks anyway, and if it's an inflation hedge while it's at it, more power to you. One thing that really caught my attention with you, again, was that when I asked you another time, I think just over Discord messages why you're interested in investing, you say it was financial freedom and living off either an investment portfolio or passive income from dividends. And so I have to ask you what draws you to that interest. I know the answer for myself, but I want to know the answer for you. A normal job with a 401k, health insurance, it can be low stress. You don't have to figure things out for yourself. And it's, at least in the past anyway, it used to be dependable and predictable. Why be interested in financial freedom at such a young age when you have so much time?
I think the best part about it is when you're starting out early. You can start at any time, but when you're starting out early, that can truly make a difference in how much money you can make over your lifetime. But I've seen how hard people around me work, and they're trading their time for money. I've definitely read Rich Dad, Poor Dad. I've read Millionaire Fast Lane by MJ DeMarco. These are some interesting books about passive income. There's definitely nothing wrong with a regular job. I've just realized that obviously it would be preferred to not take the traditional route in that sense. Even with a 401k, your freedom is taken away from you. My dad's retirement account doesn't even let him choose what stocks he owns in his 401k.
Oh,
he's only allowed to buy mutual funds, and apparently, from what he's saying, they've not been performing very well.
No, I would imagine not. Jeez, that sounds like that 401k sounds like it's stuck in the 90s. Who buys mutual funds other than boomers?
Yeah,
everyone knows that ETFs pretending. Yeah, mutual funds masquerading as ETFs are the way. Right? Okay, that's interesting. I was not aware of that particular data point. But no, if you were to watch a YouTube video, in fact, I just saw one the other day it was titled "My Biggest Financial Mistake of My Life. Don't Do This." And on a title like that, it was so attention grabbing, I had to watch it. I'll save the video for you. It was literally half an hour, but I could save it for you in 10 seconds. He said, I wish I had made I think it was an IRA or a 401k earlier. And it's interesting that, number one, that's actually the reason why you're deciding to take the financial freedom path, as in not going down that road, not getting the 401k or IRA necessarily, or putting your life's investment into that. And now you're saying, too, that actually you're arguing that it could be a suboptimal investment depending on how, I guess it's a company match, or what's the reason for that?
Yeah, I'm not necessarily sure the reason, but he's only allowed to buy mutual funds. But I think at the end of the day, most people don't understand the power of passive income and the snowballing effect that you can see in your investments. And MJ DeMarco always talks about how you need to be focusing on income rather than investing in stocks or anything like that. I somewhat agree with it. I think stocks will be a big part of reaching early retirement if that's what I choose to do.
So what you're describing, and how I think I like to repackage, you were saying Millionaire Fastlane and Rich Dad, Poor Dad, those were obviously written for a time when people still read books. And I wish people still did. Anyway.
Yes.
And I think what you're describing is, think of it like you're speccing into the wrong character, right? So you're speccing into the drone class, and how the MMO is designed, where if you're trading your time for money, that's an under-optimized character that you're running. So you're investing, you're putting your character points into the wrong field. And I guess for those of you who aren't familiar, I'd imagine most people listening to this would be, but for those who aren't familiar with the Rich Dad, Poor Dad, which I'm more familiar with, I think there's a 4-quadrant graph. Is that right? And yeah. So there's one quadrant which is what most people do, is they trade money for time, right? So they work at a job and they clock in or even get a salary, right? And he was arguing that because you have finite time, there's a hard cap, and just how the economy and the system is designed, there's a hard cap on how much you can make just trading your money for time. Like, time is limited, but in theory, like, dollars in circulation, money is infinite, right? So a person who has invested money, they're essentially buying other people's labor and controlling that labor. The example Robert Kiyosaki loves to use is buying houses. Let's say you have 3 houses and 3 tenants. That's 3 families where every month they got to figure out how to pay you. Every single month they're going out there in the world and to use more simplistic terms, hustling and grinding just so they can figure out how to write you a check. So then indirectly, you're controlling other people's time and other people's labor. And then when you add leverage onto that as well, it becomes exponential to the point where if you're controlling 50 other people's time being exchanged for labor, it far outstrips anything you could ever work to achieve yourself in your own individual life. So take, for example, even the best paid doctors and lawyers. There's at best they're making probably, I'd imagine, $600,000, maybe even close to $1 million, but there's a limit on that. Whereas if you want to really get into the upper echelons of wealth, we're talking like $100 million plus, you got to start controlling other people's labor.
Great. It's the idea of utilizing leverage, right? And there's truly no better leverage than the internet right now and online business. And that's why blogs and podcasts and YouTube videos have been taken off. And there's so many people becoming some of the youngest millionaires in the world off of these platforms.
Then I have to ask about your, personal life 5-year plan, because anyone can say I'd like to be financially free and live off of passive income, but where do you want to be in 5 years? I'm asking because you're studying a very difficult field and one that would lead to a normal conventional career that spans decades. And if your plan is to financially retire by like age 27 or 28, a financial freedom by that age, it sounds like you're taking both routes simultaneously.
One of the reasons I like data analytics is because I'm learning coding, which you could learn on your own, I realize. But yeah, it definitely makes it easier to have my classes focused on coding while simultaneously learning about stocks on the side. But as for my 5-year plan, I would typically want to try to have several revenue streams. A job is a revenue stream, but that could be stocks, my blog, affiliate marketing, these types of things. But that all requires building up an audience online.
Which is what you're here for. Frankly, I don't understand. This is why I've taken the path I've taken, where if you drop in all that time to get a career runway started and then just to throw it out and financially retire at age 28, 30. I don't even know what your target age is. I just wonder why you do both of those at the same time. I guess maybe your plan is to work for a limited amount of time and then save so much that you can retire early and then not do the full lifespan career you were planning.
Yeah, that would ideally be the goal. And I'm only a couple semesters away from graduation, so it really would just feel like a waste if I were to drop out now. But at the same time, it is so expensive. I didn't think I could do entrepreneurship at all. I generally don't like the idea of managing people very much. But with the internet, it opens up a whole different world. And if I had the knowledge I had now 2 years ago, I definitely would have considered just investing instead, trying to go through entrepreneurship. I just think it's really interesting with the internet because we've seen recently with the unnamed regulations coming on from the recent situation geopolitically. You can have your business taken away from you for some pretty erroneous reasons.
I'm not familiar with what you're talking about.
The disease, don't want to name it out loud.
Oh, so when you say your business taking away from you, are you referring to a shutdown, or I don't understand?
Yeah, we've seen all these shutdowns recently, and all these people's livelihoods have just been taken away from them.
Yeah, I don't think you're talking about making something brick and mortar. That's my impression, though.
Yeah, definitely not talking about that, yeah. It's just crazy to me what's been going on.
Fast forwarding, say you go through your career and you make the right picks and your Tesla stock blows up. How much money do you think you would need to have a passive income, financially free lifestyle?
Probably to be at least 1 or 2 million. If I truly wanted to retire on it right away, at that point you could make like 4% yield. You get like $40,000.
Yeah, that's what people don't understand.
So you got to get
$2 million
taxes and everything else.
Exactly.
Yeah.
Congratulations, you have a median U.S. income on $1 to $2 million. I mean, wealth is not what people imagine it to be, and it's not.
Yeah, definitely not.
Lambo.
Yeah, certainly not. You got to factor in the tax man, and especially if you have kids or various different expenses, it can definitely wreck your plans if you're trying to retire early in that regard.
Let's say that you max out your Robinhood leverage and you buy some, by your interest, some Canadian uranium miner, and there's a big announcement, and then it blows up, and you have all the money you need. What do you do that day one? What do you do?
Might just quit going to college and then go online full time. At that point, it doesn't even necessarily matter if I fail, if I have enough money. Mostly what I would be doing now, to be honest, I definitely travel somewhere, but I'm not too big on traveling. Definitely have some celebrations, but I'd probably actually start writing on my blog regularly, because right now I don't do that. And post more on Twitter and try to build up a following.
It's interesting he says that to the audience, because it may not seem like an exciting answer, but in a way it is, and I'll explain why it's an exciting answer. Because the normal person, this is the lottery curse, for example. Normal person, you set them up, you give them $1 to $2 million, that's gone in, I forget the statistic, but it's gone in a few years just after that. The habits that, or the behavior, the mentality, whatever you want to call it, I'm not going to use the word mindset, that's used way too much. The things that got you to where you can be financially free and have a passive income, semi-retired, early retirement lifestyle, the same things that got you there are the same ones that maintain it. So when I asked him that, he said, oh, no, actually, I'd be doing the same thing. I'm just continue working on my blog and doing whatever. And exactly. And that's why you'd be able to continue to be financially free and have a passive income retirement lifestyle, even at that point as well. So actually, that's the answer I was exactly looking for.
Yeah, it's almost why that's why we're not the Wall Street bettors making several million in 1 year or less, and then just blowing it all right away immediately after that, because gamblers always lose in the end most of the time.
This might even be going way too far, but I will say, based on that answer, it sounds like you are just allergic to fun in the traditional way. So obviously you play games and you do all that. When I asked you had the $500 when you were working summer jobs, you could have done this and this, whatever normal people do. You didn't do that. And then when I asked you if you had a hypothetical $1 to $2 million, you said, no, I wouldn't really change anything. Yeah, I literally think, and I'm also like this in a way too, even though I'm changing. I think if you had $1 to $2 million in the bank, you wouldn't change a thing. I think you're literally one of those people.
Oh yeah, I've just built up habits over time. I also not necessarily too big on the idea of moving. I like where I live and like living in the United States.
You have to see the trajectory the country's on, and you can't be along on the United States.
Oh yeah, you can see it in my investments. I'm definitely not long the United States at the moment.
Oh really? How have you structured it to be for ex-US investing? I'll tell you how I do, but I'm curious how you actually hedge yourself against the United States in investing.
I'm actually not invested in any of the companies in the United States, and Biden was talking about banning fracking. I did own a U.S. oil producer, but I quickly got rid of that and switched to one in Indonesia. I only own one company that has operations in the United States right now.
That is incredible. That is so atypical. Wow. Okay, you are quite hedged.
Personally, for me, that's typically where the better commodity names are. The U.S. hasn't been very great for mining, so a lot of the better projects are in Canada or Australia, or also some parts of Africa. It's where I have a lot of my money.
It just crossed my attention the other day that China raised a flag on the moon. Did you see that news story?
Oh, yes, I did.
Okay.
I saw a headline where they were saying they were flaunting it. Like, I don't know if that's hyperbolic or not.
What news source? No, it was just a press release from the Global China Times, CGTN. I don't know that one. Anyway,
I forget exactly the news source, but
yeah, the last time the U.S. put a flag on the moon was in the 70s.
Yeah, it shows you potentially the sign of the times, or maybe a bit of a predictor there.
So then finally, to round it up, and this is a question I'm going to ask every person in every interview I do, and that is, what's the best investment they've ever made? The answer does not have to be an equity. It does not have to be a stock. So what is the best investment you've ever made? So Warren Buffett says the best investment you can make is an investment in yourself.
Oh, yes. I've heard it so much, it sounds cliche, but I am more in the investment space than others, so I guess I've heard it more than the average person. But
cliche or not, I think it's a good sign. I think people should be reminded.
Yeah, I definitely agree. I
think it should be on every wall, every investor's wall, like Soviet propaganda.
I definitely think people should read not just about investments, but about all sorts of topics. They should read about writings. They should read writings that have been written by people who have done it before in whatever capacity they're trying to learn a new subject. If they're trying to learn about investments, they should read about Peter Lynch or Charlie Munger or private investors that have retired on their own money and they're living on their own income. I was reading a forum on Quora about that. If you want to learn about financial independence, listen to people who've done it before.
Like
As you've certainly done it. Yes, you've done it yourself. Yes. But if I'm going to answer the question, I could say a book, but I don't know. Reading One Up on Wall Street by Peter Lynch is definitely a good book to read, or MJ DeMarco's Millionaire Fastlane.
Those are your two favorite books?
Mm-hmm.
And those are also the best investment you've ever made?
Yeah.
Best stock investment, the best one you've ever made.
It's tied for a company that operates in Burundi, which is Africa.
Mm-hmm. I'm familiar.
Called Rainbow Rare Earths, and I made 200% on that stock. It's been pulling back recently, but I made 200% on that. And also, I put on USO. That was back when oil went below $0 a barrel on their contracts.
That was March, April.
Yeah, around that time frame. I'd owned it before it had that dip to zero. But that was also 200% gain on my puts there.
What inspired you to take such a decisive move on USO at that time period? Everyone else was freaking out. Interesting.
I was reading up on Harris Kupperman, and he has a bunch of different strategies about how he basically targets opportunities in the markets. And I don't know, I was trying to identify some things on my own, and I realized that oil was not going to have a good time if there was a economic crash, just like any other commodity. But oil was, I definitely did not expect oil to go negative there.
Yeah,
I'd say that.
Interesting responses, both the conventional answer and also the personal real answer to what's the best investment you ever made. And to reiterate, I think that's such an important question. I'll be asking every person I interview on that question, and I think the answers will entertain and inform people listening. The final thing too is, are you familiar with Martin Shkreli?
I have heard of him, but I am not familiar with why some people are so infatuated with him. I'll be honest with you.
Count me one of those people in there. So then, what do you know about Martin Shkreli?
I basically just knew there was a scandal going on with him. I haven't read much more into it than that. I know I really should have, especially as a listener to the podcast, but
interesting. Okay.
I haven't looked into it very much.
He's one of the most maligned people in the 21st century, and also one of the most brilliant minds of our time. And you are doing a disservice to yourself not looking into this incredible, exceptional individual. You know what's the best investment you can make is watching clips of old Martin Shkreli live streams. That's the best investment you can make. So then the follow-up question would have been, like, do you believe in the hashtag Free Shkreli movement? But I won't ask you to talk about something you're not informed on. So don't worry.
Okay.
But no, so that's interesting. By the way, guys, Martin Shkreli was a very relevant figure as recently as 2015, 2016. And here we have now a Gen Z Zoomer who barely even knows who that is. It really dates us, doesn't it? Oh man.
I'm sorry to do that to you. I'm sorry to do that.
No problem. That's why I'm here. I'm here actually. One of the rules of the channel is to keep people informed, entertained, and up to date on his activities while he's still in prison. Well, that wraps up the interview. I want to thank my guest for quite the talk. We covered so many different topics, and I think just based on how much things clicked and moved forward, I'll have to have you back on again in the future. And if you could, please, by all means, plug your stuff and let me know and let others know where people can find you.
Oh, definitely. Yeah. Thanks for having me on, for sure. It was definitely a productive conversation. But if you want to reach me on Twitter, I'm at Helborne Finance, HELBORNE. And my blog is also helbornefinance.com.
And why would people be interested in that? And why should people follow that?
Particularly if you're interested in commodities, I do talk about financial independence at times, but it would mostly be about commodities there and niche markets.
It's a vehicle to get where you want to be and get those sweet returns, those sweet green numbers.
Oh yeah, the baggers.
All right, that wraps up our conversation here tonight with Helborne Finance, and I will catch you all on the next podcast. Rounding up today's show is the Martin Minute. We don't have any major blog posts, at least from an investing perspective, strictly this week. In fact, there are no new tickers that make an appearance in the most recent blog post, but nevertheless, actually, this was one of the most interesting blog posts I've read on the new Martin Shkreli blog since starting this podcast. And what drew most of my attention was a discussion of Nicholas Taleb's Fooled by Randomness. I've actually never read that book, but I am familiar with his activities on Twitter. I've been following him for some time, and initially he gained quite a bit. He, as in Nicholas Nassim Taleb, I'm not sure. He gained a great deal of credibility with me because I noticed he was one of the few voices as early as February of this year cautioning against not only the coronavirus, but also encouraging people to use masks. As much as I know that it's a hot button issue, actually, believe it or not, at the time, back in February, all the science-y, authoritarian perspective, as in like experts know everything, knowledge people, they're the ones trying to tell everybody that masks are useless and you shouldn't wear them. Now, actually, obviously, the narrative has changed on that a great deal, but credit where it was due. Nicholas Taleb, he was pushing and encouraging people to stock up on masks and use masks before this whole thing kicked off, and I'm sure a lot of people were saved a great deal of pain and grief from his advice. So at that time, he gained so much credibility with me. Martin's book review on Fooled by Randomness is measured. It's not exactly praising the entire affair, but also it's not all critical either. He points out that the decision theory that underpins Fooled by Randomness is not only A, common knowledge, but B, something that should be studied in a coherent, cohesive worldview setting. What do I mean by that? He says you should learn decision theory as an entire intellectual subset, not just in snippets and tidbits such as in Fooled by Randomness, though I suspect Fooled by Randomness is more a mass consumer audience book, and so in my view, mistakes like that or oversights in structure are easily forgivable. So that writing was definitely a worthwhile read. I've noticed there are many aspirational types who look up a great deal to Nicholas Taleb and idolize a lot of what he said, and I think there definitely are holes and mistakes and pitfalls in just following that line of thinking. For me, the greatest criticism of Nicholas Taleb's work and also his presence on Twitter is not the transformation of decision theory into a mass market appealing book. It's that he obviously identifies so many people as what he calls intellectual yet idiots. Using Nicholas Taleb's word, is someone who has gone through the education system, and obviously they like to flout their credentials and they're all about the science and experts and have a very authoritarian view on knowledge, yet pragmatically speaking, they just don't deliver results. They don't really seem to know what they're talking about. And that is completely a valid and an observation I agree with. However, one thing I noticed with Nicholas Taleb's work and his tweets, and from the little I've gathered following his Twitter presence, is that he doesn't look at this systematically and structurally. So you have to ask yourself, why are people like that being promoted and advanced by the system? There's no criticism of that system in general or what gets people into those positions in the first place, and that part is severely lacking from his work. And if he has done an examination on how those people are advanced, please forgive me and correct me, but so far I haven't seen it. Last on the Martin Shkreli Minute, I took the liberty of looking up the Bureau of Prisons.gov information on Martin Shkreli. I know this is common, but I just wanted to get the information directly from the source, the government source, rather than just mindlessly repeating what people are saying on Reddit or Instagram. I have Martin Shkreli's Bureau of Prisons inmate results right here in front of me. And what's interesting is that it specifies his release date as September 14th, 2023. And from those of you who have watched the previous podcasts, you'll remember that he estimated, based on various appeals and programs, he would be out of prison as early as 2022. And so obviously there's a 1 year discrepancy between those two dates. But still, even 2023, considering we are now just rolling into 2021, 2023 feels just around the corner. Finally, I'll just read off all the information straight from the database entry, and you can do with that information as you please. I encourage people to be helpful. He says that he's interested in people sending scientific studies, medical journals. And without further ado, here's the information. Entered name is Martin Shkreli. Register number is 87850-053. Age 37, race white, sex male. Release date September 14th, 2023. Located at FCI Allenwood Low Security Prison. That wraps up the Martin Minute. I'd like to thank everybody for listening to this week's podcast and bearing with me through the interview. It's the first time conducting an interview on this podcast. I found that we had so many overlapping zones of commonality and similar thinking that it was so difficult to get pinned down on just a simple topic. And clearly what that means is that I'll have to have him back on the show, because everything we touched I felt was more of at a surface level, and I would love to drill down more into his thoughts, specifically coming from a younger generation perspective. But considering the topics covered in such a short amount of time, I felt it truly was an excellent interview, and I hope you all enjoy and glean the information I wanted you to glean from that interview. That's it for this week's Eugene Exchange podcast. See you all next time.